Yesterday, Bloomberg reported that SpaceX, which is Elon Musk's rocket company, was in talks to sell insider shares in a transaction that would value SpaceX at about $350 billion US. Now, apparently, this would cement SpaceX's status as the world's most valuable private startup. Our guest company is an investor in SpaceX. We're joined by Jeff Parks, CEO and Director of Stack Capital. It's great to see you.
Thank you so much for having me.
So you were happy to hear about this rich valuation for SpaceX?
Yesterday was a fantastic day for Stack shareholders, so very impressed with them selling shares at $350 billion.
Roughly how much of your portfolio is of Stack's portfolio is in SpaceX right now?
Pre the markup, it was around 11% position. Post the markup, it's going to be slightly under a 20% position in the portfolio.
And that's worth almost 20 million Canadian.
Yeah, Canadian dollars in the portfolio.
So of course, we've all seen those spectacular rockets, but a big part of the value of SpaceX is Starlink, those communication satellites they put up, people can get internet.
That's the beautiful thing. If you break the business down, it breaks down into two parts. You have your launch capabilities, which is the Falcon 9 and which is Starship. I'm sure a lot of people on this have seen that large rocket that's almost like 40 stories high in terms of a rocket.
Unbelievable.
Launch up, they re-catch that, and I call it the chopsticks. They catch it with chopsticks, and they call it like a 30-story tower building, was what they did there. So unbelievable on that side of the business, and they control 80% of the cargo that goes up to space is on a SpaceX rocket. Then you have your Starlink side of the business, and Starlink is, if you need access to internet in rural America, Canada, wherever you are in the world, you can get access via Starlink. There's 2.1 billion people that have no access into internet. So I think about this company as two monopolies and one that you get to invest in.
On carrying cargo into space and then the network of satellites.
Exactly. Even if you look at it, like at the beginning of the year, they only had around 2.2 million underlying Starlink users. This time, 2 weeks ago, they crossed 5 million users on the Starlink side. So a lot of people are gravitating towards that because you can't get access to internet in certain places.
Tell us how you guys at Stack Capital ended up putting money into SpaceX. When did it happen? How did you connect with the company?
So we launched 3 years ago, and what we wanted to do is we wanted to democratize access to growth in late-stage companies. I was on the hedge fund side of the business, and what I kept on seeing was you couldn't get access into IPOs. You couldn't get access into some of the world's most disruptive companies. So what my partners and I did was we launched a permanent capital pool that launched on the TSX so anybody can buy it. You can buy it in a TSFA, RSP, doesn't matter. And what we want to do is give people access to these growth and late-stage businesses. And SpaceX was high up on our list, as you saw, crossing $350 billion, being one of the most valuable private companies out there. That disruptive nature and that type of company is what we wanted to give people access into.
Another company that you have a stake in is Canva. They're still private, but they are in some ways a rival to Adobe.
Very, very big rival to Adobe out there right now. They recently just hired the CFO away from Zoom. So there's aspirations to be a public company right now, or at one point in time. So it's another very, very valuable private tech company that there's almost 200 million people of monthly active users who use Canva. So another high quality business that we think goes public in the US at one point.
And they bought a company called Leonardo.ai. They spent $250 million US.
Yeah, they wanted to bring an LLM internally within the company. So that was one acquisition that made a lot of sense for them versus going outside to the OpenAIs of the world, the Anthropics of the world, so they can generate a lot of that content within their own company.
So you at Stack, you're kind of like a KKR then, a private equity fund that's publicly traded?
Very similar. So anybody, once again, you can go on tickers, TSX, STCK, you can go on there. What we have is a pool of growth in late stage companies. We kind of target companies that are like 6 to 36 months away from an IPO because we want to get you in there before, as you watch on BNN or any of the other channels out there. When you see these companies go public, it's like, how do you participate in this? And this is one way you can do it, by buying our underlying shares to get exposure to these companies.
And then how will you raise the money? By equity issues?
Yeah, and we just completed an equity issue 2 or 3 weeks ago. So we were trading around $10.25 at that time. We actually raised capital above the share price at $11, which you don't generally see out there in the market. So,
no.
But it just shows that we have strong shareholders and they believe in the companies and what we're doing. And I think 2025 will be a robust year for IPOs out there. And I think we'll have some of our underlying portfolio companies go public. So now's a great time to get invested in the company.
Can you tell us about 1 or 2 other investee companies that you have?
Yeah, another company would be a company called Locus Robotics, which is based out of Boston. So all those smart guys that come out of MIT, these guys are the top of the top in terms of robotics. They take their robots and they put them in third-party logistics facilities. So think FedEx, UPS, DHL. And it helps those individuals within those facilities in terms of they don't have to walk 25 kilometers a day walking around a facility. So it helps the individual, and it also takes your cost per pick down by 33%. That's one other business. Another one on top of that is a Canadian company, Hopper. So Fred Lalonde, Dakota Smith, founder and president there. Travel and leisure business. That's another very, very impressive business. They've been growing quite nicely out there in the market. They've been signing a lot of B2B contracts. So if you think about Capital One and you go on Capital One and you want to book your travel, Hopper's the individual behind them that they're pushing that underlying travel product on their platform. So high quality business. I think they have aspirations as well to go public one day, and very good crew over at that company.
Are you finding that you come up against big pension funds? Are they your rivals to put money into these private companies?
Sometimes pensions, sometimes some crossover investors. So think like U.S. Crossover hedge funds. They come in, but nobody thought about the structure properly like we did. We sat there and wanted to create a permanent capital structure where you never have to worry about if somebody's redeeming their money, you're a forced seller out there in the market. We didn't want that to happen to us, and that happens to a lot of VC and PE guys. So it was important for us to have a really, really good structure that anybody could buy out there, and didn't cause issues with, like, let's say a company did an IPO in the timeline that you wanted to. There weren't going to be redemptions that hurt your underlying portfolio companies and hurt your company. So that was important to us. But who else do we really run into out there? It's a market where, go back into the 70s, and if you were sitting out there and you had access to a fax machine, you would have an informational advantage. That's what this market is in the private market. It's incredible. The access to information that you can get, and if you put in a lot of hard work, you have an information advantage on a lot of individuals, which is fantastic, and that allows you to accrue a lot of value for the underlying shareholders.
And you refer to liquidity. So if I understand you right, if say you launch an ETF or a closed-end fund that invested in these companies, they are liquid assets, these pre-IPO companies. So you're saying your model means that you don't get caught up with redemption requests.
Exactly. If you run into that point in time where it was 2022, 2023 after COVID, and the markets took a tumble, you don't want to be a forced seller in that environment. So that's why we strategically set up our structure the way it is, where that doesn't happen to you.
Thank you very much indeed for joining us. That is an interesting story, and you must be happy you partly own a bit of SpaceX.